In this video, we are going to be analysing AVCT. It did close down over 6% on Friday. So what are going to be the key levels we're paying attention to going forward? So recently as well, just to note, they did have a 1-to-15 split. Never a good sign. Again, always be cautious when you see this happening in a company, because if they're doing a reverse stock split, a normal split is good. It shows that the company is growing, the stocks may be a bit too expensive and they still want to make it attractive to investors, so they will do a split. A reverse stock split, on the other hand, is usually the only time they ever tend to do this is when they're at risk of getting delisted. And what do I mean by that? Over on the NASDAQ, you usually need to be worth $1 a share, at least at a minimum. So if you're not worth $1 a share, you do risk being delisted. So that's usually why you see these stocks and end up doing a reverse stock split if they're under $1. So not a good sign. We can see it still continuing this downward trend since that has happened. I mean, it went from $4, lost around 75% since that reverse stock split. Again, never a good thing. And usually it can be an easy trade, just look, something you should look to observe when they have these reverse stock split. How do they react? Usually they're in bearish play. But that, again, do your own observations. But really, what are the key levels and we're paying attention to? So looking over on the longer term time frame, which we're on now, the two closest resistances we have is at $3.95 and $6.30. So these are the levels I would be paying attention to if we get a good bit of momentum. But again, that is over a 300% increase from where we are now. So what are some levels we could be focusing on which are closer to where we are currently sitting? And for this, we will use a 20 and 30-day chart to give you some levels which are close to where we are now. And here we can see we now have support and resistance levels to be paying attention to. So on the resistance side, if we start pushing up, we have resistances at $1.57 and $1.35. So if we start to push up, be watching for how volume increases coming into these levels, because again, these can provide you the good trading opportunities. If you see us, you will see volume increase as you hit this level, but it's whether are we bearish or are we bullish coming into this level. Now, if you're bearish, you can usually just play the initial touch of this level. 9 times out of 10, you'll hit this level, you'll get a pullback. That's how some people look to trade it, just scalp it short. Not even a scalp, you can usually look to get quite a decent move on it. You can look to hold for around 10 to 20 minutes. But on the other hand, if you're more bullish on it, what you want to be waiting for really is a break above this 135, come back to retest it as a support, and that's usually what we like to see, because this kind of confirms that level, gives us a bit more of a bullish signal, and then if it can hold, then we're looking for that move to around 155, and then again, really the trend just repeats itself. You can look to play the initial pullback. Every time we hit a level, we really expect to see a pullback. You can look to play that, and then wait for that break above, come back to test it as support, and then if it can hold, you expect to move to that next level, and in this case that will be 165. Now on these kind of stocks, it is a bit harder to do this kind of strategy, because again, sometimes it's only a 10-cent move. You can see from 155 to 165. These are going to be hard to trade. It's up to you if you still look to trade them, because again, you don't have much movement. You've got 10 cents, yes, in the sense of percentage move, it's still quite big, but you're going to get screwed on spreads, because even if it's a cent, that's a big amount of profit. So that would be something we'd be looking out for. Probably be more ignoring of these stocks when they're that close together, and instead look for the 135 to 155, provides good upside. And then if we can break this 165, test it as a support, then we got an easy move, or not an easy move, but like a good risk to reward to around 266, 195, and kind of just levels going higher, 223, 486. So these would be the key levels we're looking at on a resistance side. Now we'll look at some quick support levels we can focus on. We don't have too many. We only got a 77-cent support and a 47-cent statistical mean. So these would be the key levels. If we start to spike down, we could definitely be looking at as potential plays. But again, these kind of ones, I would be more careful trying to catch a falling knife. Yes, because they're so low, it's one that has a bit more attention to it. You will probably get these bounces, but it's just how far it's going to fall before it does that bounce, because falling from 77 cents to 47 cents, when you look at the cents, is not all that much, but that's a 40% decrease. Can you hold through that? If not, again, be cautious. So again, these are usually something I look to play more to the bullish side. Wait for a level break or a kind of a resistance break. Wait for that retap, have a 4 to 5 cent stop, maybe at a push 10, but that's quite extreme, and then you're not getting a great risk to reward. But on these kind of trades, you can look to usually get 3 to 4 risk to reward, have a tight stop below, and then look to play to the next deviation. Anyway, that is the breakdown on AVCT. If you enjoyed the video, why not drop a like and subscribe, and check out one of these 2 analysis videos.